Hi, I'm TaxMax. Let's break down today's tax topic.
Let's talk about when and how corporation tax is actually paid. Once a company has worked out its corporation tax liability for a chargeable accounting period, that tax does not just sit there indefinitely. There are strict statutory deadlines for payment. For most companies, corporation tax is due to be paid 9 months and 1 day after the end of the chargeable accounting period. So, if a company prepares accounts to the 31st of March, the corporation tax payment deadline will normally be the 1st of January following that year end. This deadline applies regardless of whether the corporation tax return has been filed. Payment and filing are separate obligations. A company can be fully up to date with filing and still be late paying the tax. Equally, a company can pay on time but file the return late. From HMRC's perspective, both matter. Larger companies are subject to different rules. Companies that are classed as large or very large for corporation tax purposes do not pay their tax in a single lump sum after the year end. Instead, they are required to pay corporation tax by installments during the accounting period. These are known as quarterly installment payments, often shortened to QIPs. Under the installment regime, corporation tax is paid in advance based on estimated profits. This means a company may be paying corporation tax before its final taxable profits are known. Adjustments are then made once the final liability is calculated. Whether a company falls into the installment regime depends on its level of taxable profits, and in some cases, the number of associated companies it has. Associated companies reduce the thresholds at which installment payments apply. This is a common area where companies are caught out. Interest is charged on late paid corporation tax. Interest runs from the statutory due date until the tax is paid in full. It is charged regardless of whether the delay was deliberate or accidental. Interest is not a penalty. It is compensation to HMRC for the late payment of tax. Penalties for late filing are separate. If corporation tax is paid late and the return is also filed late, both interest and penalties can apply at the same time. If a company cannot pay its corporation tax on time, ignoring the problem makes things worse. HMRC offers time to pay arrangements in appropriate cases. These are formal agreements that allow tax to be paid in installments. However, they must be agreed with HMRC. They are not automatic, and interest will usually still apply. The key point is this: corporation tax payment deadlines are strict. Payment is required even if figures are provisional. And interest starts running automatically when tax is late. Understanding when corporation tax is due and how the payment rules work is just as important as calculating the tax itself. Educational content only. This is not tax advice. Tax rules can change, and you should always check current HMRC guidance.
Educational content only, not advice. Rules can change.